Hi there, good morning. You're watching Chartbusters. This is a show where we highlight the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. I'm Mangla Malu. With me is Reema Tendulkar. This is the last trading day of the week. The last 2 days have been exceptionally rough for our markets. We're at the low point of the day for all the frontline indices, and the advanced decline ratio not doing too well.
Hi Manglam, and there's absolutely no place to hide. Autos are looking quite weak in trade. Even your Bajaj Finance twins are under pressure. Private sector banks like Kotak, Axis Bank, ICICI Bank are also under pressure. The only stocks which are currently in the green are Titan and TCS. And remember, both these stocks have had a steep decline in the recent past on account of growth issues. And apart from that, in HUL, which declares numbers on Monday? On Tuesday. All right. So these are a few of these, FMCG defensive kind of names which are holding up. But other than that, it's quite a weak looking screen that you can see. Let's take a look at the top headlines that we're tracking at this hour. ACC surges post an all-round beat in Q2. CY19 EBITDA per ton comes in at a multi-year high. Other cement stocks like Ambuja and Ultratech Cement see a rub-off effect.
Cyient hits a fresh 52-week low on poor first quarter performance with a miss on all accounts. Morgan Stanley has cut their FY20 to 22 EPS estimates by 5 to 7%. Also, the target price lowered by 100 rupees from 720 to 620.
L&T Infotech's numbers are operationally in line, but the stock sells off as growth rate has slowed down to 1% on a quarter-on-quarter basis.
Rallis India surges. Company reports strong performance in the first quarter. Profit jumps up 24%, and the management says growth is driven by the international business, and the seed business sees the momentum continuing. All right, so we're weak for the market. In fact, over the last couple of trading sessions, if you take a look at it, the Nifty from Wednesday's high of 11,707, which incidentally on that day was also the 50-day moving average, has corrected almost 200 points. Steeper is the weakness that we've seen in the Nifty Bank. So the Nifty Bank over the last couple of trading sessions from Wednesday's high of close to 30,800, where we have seen close to around 625 points in the decline coming in from the Nifty Bank. So there you have it, Nifty 200 points lower from Wednesday's high, and the Nifty Bank 625 points from Wednesday's high. Reema, I was looking at the 50-day moving average and the 20-day moving average, long gone above 11,700, and there was hope that maybe the 100-day moving average would be supported at 11,560. That doesn't seem to be the case as well. Pain in the broader markets much more, because was looking at the number of stocks which have hit 52-week high as well as 52-week lows. The number of stocks which are at 52-week highs are close to around 13, and the ones which are at 52-week low are 228.
That is a scary statistic, but yes, just a few days ago, we were knocking on the heels of 11,700, hoping to cross that range on the way up. And now we're almost on the verge of breaching that 11,500 mark, having broken past below our 100-day moving average. Let's pose this technical question then to Ashwani Gujral. Ashwani, last day of the week, are you sensing more weakness in the market, and what trade would you recommend at this hour?
See, basically the way we've fallen for last couple of days, it appears to be fairly clear that some large sellers are in the market who want to sell and get out at any price. And maybe this FPI news has this triggered the first sell-off few days back, and again they have come back to sell. Because the sort of vertical fall you have, this cannot be created by retail investors. So basically stop losses hit, and the fear of God put into the bulls here. So my sense is that if you went short in the morning, right now is a good time to cover those shorts and wait for some sort of upside before you go short again. So that way, trying to short right now is a very silly trade, because chances are that some amount of short covering or pullback can happen. Having said that, Union Bank is a sell with a stop of 76, target of 74. Hind Unilever is a buy with a stop of 1740, target of 1800, and Titan is a sell with a stop of 1100, target of 1050.
Ashwani, any further sell ideas in the auto space? Because Maruti, after a couple of trading sessions of drubbing, continues to be at 52-week low. We have Eicher Motors at 52-week low. And even M&M, that one yesterday hit a 52-week low, not doing too well as well.
What other autos are left now? Even two-wheelers are now coming off. If you see Bajaj Auto's chart, so autos are clear sell and consumption. If you see Titan, Bajaj Finance, etc., everything which has consumption involved, all of those stocks are coming off. And we have to understand that we were going through a pullback rally, 200 points on the Nifty. That is over. And once we give back this 11,460 zone, we'll probably fall even harder.
All right, Ashwani, thanks a lot for that. Scary prospects coming in for consumer stocks as far as the chart checks are concerned, but not so good prospects for a couple of these mid-cap IT companies as well. Cyient lower in double digits today, and L&T Infotech as well. Rima, what's spooking the street?
Well, growth. So we've been talking about a growth slowdown for consumer names, but even these mid-cap IT companies are now showing you that this global growth slowdown is impacting them. So remember earlier this week we had Mindtree, which reported a very weak quarter, and this time it's Cyient. It's a fresh 52-week low on the stock. It's declined 20% so far this year. Our revenues have fallen more than 5% on a quarter-on-quarter basis. It's declined for the third time on a sequential basis in the last 5 quarters. On a year-on-year basis, if you can just pull up the bar chart, you can see just 6 quarters ago, growth was in mid-teens. At okay, you know that data is not there, but say 15% just a year ago, and that has come now to negative growth. In fact, the company's reported a negative year-on-year revenue growth for the first time in the last 10 years. In fact, on account of the uncertainty, this time the company has said that we cannot continue to give you a revenue guidance. They had given us a guidance last quarter for FY20, but they've discontinued that on the revenue, though they continue to say that they will see a double-digit EBIT growth in FY20, and this is on the back of the cost-cutting initiatives that the company is undertaken. Morgan Stanley, which is a long-time bull in Cyient, so they say we expect now a flattish revenue in FY20. They actually expect the EBIT to decline by 2 to 3% for Cyient, despite the management guiding for a double-digit growth. So they don't believe the management's guidance. They've cut their EPS estimates and lowered the target price to 620.
All right, and L&T Infotech, that stock's lower as well, while the numbers were in line, growth concerns concerning them as well?
Yeah, so operationally, you could say the numbers were in line, but again, it's this growth slowdown fear which is impacting L&T Infotech as well. Again, let's, if we could put up the numbers, you can see how the sequential growth on a constant currency basis has slowed down for the company to 1%. On a year-on-year basis, growth was at nearly 23% a year ago, and that has come down to 12.9%. Other issues include that, one, the weakness in the top line was documented, but manufacturing, because the top line was actually in the financial space. So, but manufacturing has declined more than 7% for them. Attrition has increased to 18.3%, which could potentially mean some margin pressures going ahead. What Ambit says is that, yes, the weakness in the top client may have bottomed out, but it's not that they see recovery over there anytime now. And beyond the top line, they see challenges to come for the company from Q2 onwards, which is why they cut their EPS estimates. They continue to remain buyers in the particular stock, but now they expect, or they are just hopeful, the company will be able to deliver a double-digit growth in FY20 versus the company's earlier guidance of growth in the leadership quadrant. So growth slowdown blues impacting L&T Infotech. There is a conference call at 11 o'clock, so we will get some more clarity then.
All right, Rima, thanks a lot for that. Before we slip into a short break, a couple of interesting moves taking place in the mid-cap space. While everything is lower, a big move coming in on Just Dial. Just the last few minutes, we've seen some purchase come by in Just Dial. Just Dial's at the high point of the day. And remember, it's been a big mover this year. Upwards of 50% is the sort of move that we've seen on Just Dial. There you have it at the high point of the day. And along with that, we have Colgate. The stock recovered from the lows yesterday after an in-line set of numbers. Brokerages also believe the numbers are in line. Opened in the red today and has seen some purchase at the lower levels at the high point of the day. With that, we slip into a short break. Come back, we talk about some other stocks which are gaining, ACC as well as Rallis India on the back of their good numbers. Also, Talwalkar Twins, they're on our radar after a near 40% drubbing over the last couple of trading sessions.
Watch me discuss my brand journey